Go participants, I think. No, click on click. Click on the dots.
Make us.
There we go.
Okay,
Okay,
sweet. All right, thank you.
you're welcome.
Hello, Carmisha. Thank you for joining. I was waiting to see if we're going to get a couple more people to kind of hop on here to see if they want to join today's class. If not, I can go over what I was going to just kind of go over as far as a presentation wise, if you don't mind it just being you and I, or we can handle it however you would like.
Yeah, I don't mind. Good morning also.
We'll just wait another couple minutes, see if we get anybody to join in here on Zoom, and then get things crack-a-lacking here.
It's witnessing stuff in my life right now, and it's been surprising to me because it's needed to do something that happens. And so I kind of thought that would be a great help. Actually, Chuck told me I was a lot of you recommending, that's her topic. So then I got in with that. So we're going to talk about today how fear can control you and how you can overcome it. This is new territory. So I just this topic because I recently found myself in this strange spot. I mean, we all of course have very different times for different reasons. Anyone who's a parent knows that every time you're cleaning the house, you're fixing. Whenever you get to
One sec, I'm gonna go shut that back door now so we don't hear. Give me one quick second. Okay, but we'll go ahead and get started because I know you probably have stuff going on today too, Carmisha, with work and business and appointments and stuff like that. So we'll go ahead and get started. I'm thinking there's probably going to be a couple that are going to trickle in here in the class, during this time, but we'll go ahead and get started. So thank you for joining. I really wanted to kind of, get some good information out there. I know I did a non-QM class last year, which had some great information, lots of good tools, to kind of discuss and what that are available for clients that are just kind of unique and outside the box. That's really what these types of products are. And it's really kind of, changing the industry a little bit with people actually being able that are either self-employed or, don't show all the income, their traditional route and things like that. So lots and lots of good information. So I'm going to go ahead and I think I have the ability to share my screen now. So let me click on share here. Okay, I'm going to do. Okay. All right. Do you guys see my screen pretty clear? Can you guys see it at all?
Yes. You hear me okay?
Carmisha, I think either your volume's off or what. I just can't hear you. I just want to let you know I couldn't hear you, but you can give a thumbs up if you do with the button.
You hear me okay now?
Okay. All right. Well, guys, let's go ahead and get started here. All right. So what's nice about Cross Country Mortgage is, obviously we have the traditional routes of financing and, between conventional loans, USDA loans, FHA loans, VA loans, all those kinds of things, and that, for the most part, I would say about 80% of people kind of fit in that box, that they might be able to qualify for, that type of mortgage. But then when you've got these other clients that may have a more unique situation, and how they have income, each and every month, sometimes you just got to kind of get creative and see, hey, what other ways can be possible to see if we can get a client to, possibly qualify, for a mortgage. You know what I mean? Because I mean, most of the time, self-employed borrowers, I'm sure you guys have either seen or have worked with, self-employed borrowers in the past. Um, it's just a unique way when, how they get money and how they show they're on their either their tax returns and what they're actually claiming they're making from their business. That's really been the biggest thing and the biggest obstacle, so to speak, when dealing with some, self-employed borrowers, because that's why they're self-employed too, because they can try to take advantage of the write-offs and, what things that they could possibly cut out that they don't have to pay taxes on. And then, maybe their business is so strong and it's bringing in, and they could be making $150,000 a year, but after, their write-offs and everything, so they can kind of just save money on paying taxes, now they're actually showing that they make 40,000 a year. And so, those kinds of situations, do come up, and we just got to try to figure out a way to, get borrowers qualified for the mortgages that they want and for their homes. So this is where non-QM and in type of mortgages kind of come in. So what we're going to do now is, let me scroll. Oops, that was a little too quick. Okay, all right, yeah, who's that guy? We'll go ahead and go to the next slide. All right, so why CCM? So, just to kind of give you an opening statement too on what, CrossCountry is all about. And so CrossCountry is the direct source of non-qualified mortgage QM business with in-house options, where we process, underwrite, and close with our own staff. So that's what's kind of nice too. We do have our own branch of non-QM type of business. We do also have other lenders that we are associated with, and we have approved lenders that we can broker deals through depending upon the situation, but we try to keep as much as we possibly can in-house, so we can kind of see and have more control over the deal and how quick and how it gets closed. And so in 2023, we were the #1 distributed retail mortgage lender in the U.S. So that was great. So basically 1 out of 44 deals nationwide was being done by us. And it's because we've been able to kind of think out the box and, get creative and find ways for people to get mortgages. And CCM's local branches have the autonomy to prioritize their pipelines for all phases of the loan process. I'm always available 7 days a week, and we dedicate it to getting it done. So that's what's just kind of nice, just dealing with us in general. Okay. And then, so as far as mortgages, more mortgages for more wins, obviously we offer, like I mentioned, the Fannie Mae and Freddie Mac products, which is the conventional, outlet for mortgages, state bond programs, like we're an approved OFA lender, Communities First lender. Most of those programs are down payment assistant or, interest rate, type of credit, programs for first-time home buyers and even second home buyers, depending upon their situation and qualifications, income-wise, and those kinds of things. Obviously FHA and VA loans. We do jumbo loans, bridge loans, construction loans, which are getting much and more popular. Lot loans, which we broker through our company, Rule First, that we do with lot loans. And then we got the non-QMs that come into place. And this is what I really kind of wanted to focus on today, was a non-QM type of mortgage options. So what is non-QM? A non-QM loan allows borrowers with non-traditional income and or past credit events to get approved, for a mortgage. So even if a client has no W-2s, pay stubs, or tax returns, we want to make sure and have some options, for the clients to possibly be able to, get a mortgage. So, for example, it assists with heavy clients with no income source, ITIN clients, which is identification, number, like if they, Social Security, all those kinds of things. Real estate investors, which is becoming even more and more frequent that we're seeing out there. And then clients with unique income calculations or complex tax situations. Okay, so here is a good breakdown of what our CCM signature expanded non-QM, products are. Okay, so the first one is the asset qualifier, where borrowers can get approved just using only their liquid assets. That one's becoming more and more popular too, because there, for some crazy reason, there's still a lot of people out there with a lot of money, but they either don't show income or possibly just some other types of issues. So that one's starting to become more and more popular in the pipeline with mortgages as of late. And then I would say probably the most popular that we do a lot of is the bank statement loan. And I'm going to kind of get into that a little bit more here too, towards the end of the presentation. We're going to kind of, touch base on that. I've got a couple of clients that I have working on getting them pre-approved right now for the bank statement loan. So this is for self-employed borrowers who use their bank statement deposits to qualify. Okay. Then we also have the foreign national, which allows borrowers living abroad to finance an investment property in the U.S. Obviously, we have our full doc solution. This is for borrowers who don't fit in the traditional, guidelines. Investor cash flow. This is another popular one that's starting to kind of, come up, where I'm getting a lot of agents ask, what is this investor cash flow? What is this kinds of things? What do they do? We're going to go over that as well. So it's real estate investors can finance new properties using their rental income only. So that's a nice new outlet for especially these investors to be able to get qualified for. 1099 income. I know, especially for you guys, that are, commission, real estate agents, and you guys get 1099, you're not W-2'd, and where you have a portion of your federal taxes and, those types of things coming out of your pay, unless you set that up on your own. So another great product for 1099, self-employed borrowers can use their 1099 income to qualify, which we use a percentage of that. So another great option for you that's in this signature expanded option for that CrossCountry offers. P&L. Okay, obviously, everybody knows what a profit and loss is. So a solution for business owners to qualify using their professionally prepared profit and loss statements. That could be another outlet for them to qualify. Work VOE qualifies borrowers using only written verification of employment. And then the ITIN gives borrowers without a social security number a financing option. So that one's probably the least, I would say, of the products that is as being utilized at this time, because for the most part, everybody has one. So, but, in the case that, you don't, and there's some issues, we've actually got a product that we may be able to help with that. Okay, and here's some of the other highlights that the CCM signature expanded products have. So flexible qualification options for borrowers that don't meet traditional standards, alternative income calculations used to qualify, common sense underwriting for creditworthiness borrowers, exceptionally friendly 35% of non-QM production, streamlined documentation options, DCSR loans close in a matter of weeks. Those are, a popular kind of like we were talking like with the, with the rental income type of, loans. That's what those are. Shortened seasoning period on credit events, investor options, only we can go up to 30 or possibly even 40-year terms. Still the 30 years seems to be a little bit more popular. The 40-year terms, they are great, but the rate on those are just a little bit higher. Non-wordable condos and condo hotels allowed. So that's another big thing that, has transpired is, especially with people that do, or they want to buy a lot of condos. And if it's not warrantable, which means it's not insured properly, it's not owned by a certain amount of percentage by people living in the properties, it's not, and it's not just owned by a bust of investors or rental agencies, things like that. That's what it means when you're talking about non-warrantable condos. And then all programs allow closing in an LLC, trust, or corporation. So that is another big, I would say big positive on these types of products, because before nothing was able to be closed in an LLC or trust or corporation, especially, and it's still the same way with the traditional options of financing. But with this, non-QM type of products, it's a different focus. We don't have to, follow the same compliance laws and guidelines when it comes to the standard Fannie and Freddie guidelines or Ginnie Mae or whatever either the government or secondary marketing partner normally guidelines and things like that are. This is outside the box, so very, very cool. Okay. All right. So signature expanded bank statement loans. Okay. So what is it? It's an alternative means to qualify self-employed borrowers using bank statements in lieu of tax returns. This one, like I mentioned earlier, is probably the most popular that I do right now. I had a couple of clients that I worked on getting them financed. One gentleman, I took a look at his tax returns, been a business owner for 25 plus years. And I took a look at his tax returns and was like, all right, well, let me just run these through. It's called our loan beam system, which calculates all of the different types of income and breakdown on tax returns. I mean, it's a great thing. It literally goes right down the tax return all the way through the 1040s, through each schedule. If it's a Schedule C borrower, calculates that income, all that stuff, and it's ran through this system. And then it spits out and it says, hey, this is what your income could be used for, to use for qualifying going the traditional route. Okay. And when I looked at my findings, when I got this report back, he was showing negative, I think it was negative $85,000 a year in income. So not positive, he was showing a negative. And so he was like, oh my gosh, what am I going to do? There's just no way I can't qualify for anything. And I'm like, well, let's just try to think outside the box here and let's see if we can maybe take a look at another option that may qualify for you. I was like, you have business bank statements, right? He's like, yes, I absolutely do. I run everything through my business bank statements. Not my personal. I have a business account and I run everything through that. So I'm like, okay, well, let's take a look at those. Let me have your most recent 24-month. Normally you can go up to 12, depending upon how long they've been in business for. But since he was in business for so long, he could have probably gone off of 12 months bank statements. But I just told him just to send me his most recent 24 months bank statements so I can take a look at those to see, based on his deposits, what we could use as possible income for him. And then after I got done reviewing his deposits, and this was minus all of his, his costs and things like that, his day-to-day costs, because they factor all that stuff in there to see what his income was. And he was at like 35 grand a month. And it was a total game changer, total change for him to be able to get qualified for. And it was an easy loan that I got done in I think it was like 35 days. I mean, it was unbelievable. He was so happy. He didn't even think this was possible because so many other places, had told him no, like, look, you've got to show more income on your tax returns or you're just not going to be able to get a loan. And he was kind of discouraged by it. And I'm like, well, and sometimes we've got to try to see what can possibly be done before, just saying no. I mean, that's my job. That's why I'm here with you guys here at Keller Williams. And this is why Cross Country Mortgage has hired me. It's because it's to teach and it's to make sure that I'm helping you guys make money. So that means we're not just going to turn away people because, someone just said no. We got to take a look at the whole package and analyze the person's, their whole situation, because every particular borrower could be different. They're not all going to be the same. So this was a great win and a great, I just love hearing praise reports when it comes to people being happy, because once they, and after that, I think I got 2 other clients already from him. You know what I mean? So those kinds of things that you just take the time to listen and figure out a person's situation, it can just be a great thing. So now, why does it exist? So allow self-employed borrowers to take advantage of tax write-offs to qualify for a mortgage, which is obviously what my past client was. So it provides simplified underwriting methods for borrowers with multiple or complicated businesses. Gives the ITIN, which is the identification tax identification number. That's what that means. And then stack of borrowers to a way to qualify for home financing. So how does it work? So program qualifiers borrowers based on an average of deposits, like I mentioned, showing bank statements over 12 to 24-month period. And then, who the benefits from this program? It's borrowers who are self-employed with non-traditional income or inconsistent cash flow. So, and some of the highlights over here, depending upon credit score, they can go up to a max loan to value of 90%. So if they've got strong credit, say they're like a 750 borrower or higher, they could potentially still only have to put down 10%. So still the traditional options, I would say, is a 30-year fixed for these clients. There are ARM loans available. And then they do have a minimum loan amount requirement, though. The minimum loan amount on these particular types of programs is $100,000. So, but we can go all the way up to $3 million. So lots of different ways and lots of different outlets for clients to be able to qualify for through the expanded bank statement program. Okay, now we're going to kind of touch on the CCM Signature Expanded Asset Qualifier. So what program is this? A program where qualification is determined based on financial assets rather than DTI, which is debt to income rates based on income documentation. So, why does it exist? Designed for high net worth borrowers looking for easy financing options. So basically how this works is the borrower can use their assets instead of income to qualify for a loan. No liquidation of assets is necessary other than funds needed for closing. So just to touch base on that. So when we're talking assets, the assets do have to be able to be liquidated. So they don't have to, they just have to be able to draw on them, at any point in time. So as far as like assets, you can't have like a bunch of, certain items that you own that have value. Those aren't technically liquidable assets. That's not funds that you can pull from either an investor account, a checking or savings account, an IRA account, all those kinds of things without any restrictions. Those kinds of things are what they're looking for. So liquidable type of assets. So I just wanted to make sure and touch on that. So as you can see, eligible assets include checking, savings, marketable securities, retirement accounts, even cryptocurrency, which is becoming more and more popular over the last few years, estates, trusts, CDs, anything that you can access money from. And then, like again, here it says who benefits from this program: high net worth borrowers, clients who recently sold, their businesses or properties, retirees, individuals who recently changed jobs, those types of things. So great stuff. And on this one too, similar to the bank statement loan, I forgot to touch on the max debt ratio on these is 50%. So that's a nice little added bonus as well. All right. Any questions real quick at this point before I move on? Yeah, please feel free to unmute and stop me. And if you need me to go over anything else again, just let me know. Everybody good? Okay. All right. So we'll move on. Okay. Here we go. Now we have our CCM Signature Expanded Investor Cash Flow option. All right, so now you're probably thinking, what's this one? Okay, this is a program that qualifies an investment property based off its rental income instead of the borrower's personal income, also known as debt service coverage ratio, which is DSCR loans, which I'm sure you guys are starting to hear a lot more about that terminology. What type of loan is that? So that's exactly what it is. It's basically all being run off of the rental income that the borrower has. So it's a nice alternative to hard money, lower rates, because hard money loans that are out there, hard money lenders, the rates are just astronomical, and it gives them an out based upon if they can't qualify their traditional way. So minimal documentation needed and fast turn times. So now here's how basically the breakdown of it and how it works. So it's whatever the rental income is divided by the principal and interest, taxes, and insurance. And that equals what their DSCR cash flow amount is. So there's no minimum DCR less than 70% LTV, no DTI or personal income considered in this calculation. Short-term rentals can use AirDNA software to qualify. So, and that's another kind of a story. I don't really want to get you confused with that, but so basically what they're going to look at is how much money is left to after the mortgage payment comes out. So if you've got a client that's an investor that has 15 properties already, okay, and whatever his DSCR amount is, the debt service coverage ratio, whatever that amount is, after if the mortgage is on the property minus what the what the rental income is minus whatever that mortgage payment is, as long as he has enough money afterward to qualify for, to keep the debt ratios and everything in line. Like I said, because this is what's nice, they don't even use income as far as like, W-2s or anything like that. This is all strictly investor cash flow. So as long as it makes sense and he's showing, he or she is showing a big positive, this loan can be done. And just some of the highlights for this one real quick too. The max LTV for this particular product though is 85%. So it is required for them to put, 15% down. They do go down as low as 620. Obviously, the better the interest, the better the credit score, the better the interest rate for that product, but it still is an option for them. And we've got 30-year and 15-year fixed terms, and we still have ARMs available. Same thing like the bank statement loans. They do have minimum loan amount requirements, which is 100,000, and there's no max DTI. So great program. Okay, and then here's the Signature Expanded Full Doc program. So this one's a little bit more unique. This one is an outlet for agency conforming prime jumbo fallout that provides unique qualification features to assist in, with more borrowers. So this one, it's the process flow and qualifications are similar to jumbo loans, and traditional documentation requirements apply. So this is when it says full doc, that means full disclosure, where you're going to have borrowers who, if they don't have W-2 income enough to qualify on its own, and they need some other means to possibly do it, or it doesn't fit within the conventional guidelines, which is you can't have anything really under 50% debt ratio for conventional. It's even the strongest credit score borrowers. You got a borrower that's got an 800 credit score, but the debt ratio is 51%, they will get denied. So because it has to be under 50%. So borrowers who need non-traditional financing options like the DACA, the ITIN, the asset utilization, W-2 or 1099, W-2 with the K-1s, no credit score, those are the clients that will benefit from this particular program. So, and then buyers seeking unique features, purchasing a non-wardable condos, condotels, hobby farm, rural homes, over 20-acre properties or ADUs, those types of clients, may, fit this box. And then you'll be surprised that there's more and more clients that are actually falling into this type of option. And then borrowers who have had a recent credit event, the debt to income ratio is over the limit, like I mentioned, divorce situations or need departing residence omission, those kinds of things. This is a product that would fit very well for them because the max debt to income ratio on this one is 55%. That's basically like what FHA's is, but this is a different outlet. So very, very cool, very unique. And it's all now about just getting product knowledge and learning. Like I'm learning more and more, each day just about which products that we have to offer, that could make sense. And I could add a couple more deals for you guys, to get closed. Okay, Signature Expanded Foreign National. What is this? It's a program for borrowers living abroad, financing an investment property. Why does it exist? No U.S. credit needed for foreign nationals who cannot obtain traditional financing. So qualify the borrower off of DSCR or asset qualifier programs. No DTI or personal income needed. Foreign liabilities verified. So these are the kinds of things that we can use to help qualify borrowers, to be able to have an investment property here that are not currently living here, or they're living in a different country and don't have the traditional types of income or history here, those kinds of things, to even qualify. And some of the highlights for this one, you do have, this is obviously a little bit more risky as far as that particular kind of program. So the max LTV is 75%. So the buyer would have to put, 25% down. But technically speaking, that's still very similar to what a 2 to 4 unit conventional property you have to do. So still within, those parameters as far as like the down payment portions of it. And same products, 30-year, 15-year fixed, minimum loan amount 100,000 to 3 million. It's not applicable for the debt to income ratio because there is no debt to income ratio. This is all based on DSCR or asset qualifying programs. For this particular product, or those two options are the ones that you need. Okay, and here's our Signature Expanded 1099 programs. So this is the one that I wanted to kind of touch on too, that's just very similar to, a lot of realtors situations, their 1099 income. So For this particular product, a program for self-employed borrowers who receive 1099s and that's their primary source of income. So independent contractors, commission sales, realtors, those kinds of things, and they're 1099 it out, and they have to set up their own, what they're going to do for their taxes and their write-offs and all that kind of stuff. So this is a perfect product for them. And why does it exist? Because it's a streamlined documentation option for qualified borrowers compared with full doc or bank statement options. So how does it work? Program qualifies the borrower with their 1099 statements only. So 1 or 2 years can be utilized to qualify. And what they do is they go off of 90% of the gross 1099 income to qualify. So I would say it's better to have 2 years. I would say rather than 1, but they will go off of 90% of the income from these 1099s, whatever they're reporting. And that's it. They're not going to look at tax returns. They're not going to look at anything else. So this is a great product, like I mentioned, for agents, tech workers, independent contractors, GIG employees, and other clients who receive 1099. So great stuff. Now, the only thing is with this one is that they do have a minimum loan amount requirement. This one's a little bit more. I believe it's 150 to 3 million instead of just being 100,000, but it's very typical, and the max debt ratio is 50%. So that's a nice highlight as well. Okay, Signature Expanded P&L. So this one is kind of, this is actually a new product, and we just learned about this one at our sales rally that they're opening up. It's a program for business owners who qualify using professionally prepared 12-month or 24-month profit and loss statements. So here's a good example too. So normally if we have your traditional borrower that's self-employed, but we're qualifying them off of their, their tax returns and either their Schedule C, E, however they're breaking it down, if they're S Corp, all that information, we break it down, depending upon what time of the year it is. But say, for instance, like now, say we're in October and they don't have their profit and loss completed yet for this year because it's not due until next year. So what we look at is their most recent 2 years tax returns and then a year-to-date unaudited profit and loss. So basically they can go through their QuickBooks or pull up whatever their profit is from January 1 all the way to October 24th and just, fill out just a general profit and loss statement. And that's perfectly fine. We get everything submitted to underwriting, get everything worked up, and get it closed. Because it's an unaudited one. But for this particular product, this is one that is professionally prepared by their tax accountant. So it has to come from them to be able to qualify. But based on that, we can use that as far as income to help qualify. And so program qualifies borrowers based on an average from their third-party verified profit and loss over a 12 to 24-month period. Which is great. I was shocked that this was even possible. Business affirmation letter documentation must be prepared by CPA, EPA, or CTEC. So those are all the basically just different types of accountants that and tax preparers that are available to help people with this. So it has to come from them. And then borrowers who are self-employed have non-traditional income. That's basically who it benefits in inconsistent cash flow. This is what this program was designed for. And as you notice on the highlights of this one, there's a couple of different differences than the other products. So the max loan to value is 80%, and the minimum FICO amount is a 680. So this one is not down to the 620. You have to have a minimum of 680 or higher to qualify for this program. But they did kind of bump it back down to the loan amount requirements. So the minimum loan amount for this product is $100,000 all the way up to $2 million. And the max debt to income ratio is 50%. So very, very cool. Okay. Now we've got our Signature Expanded Work VOE only. And this one's new too. This one is another one that was added, just this year as far as a highlight that could be done. So what is it? It's a program that streamlines the income verification process by going straight to the employer for verification. So for borrowers who have a third or who have a hard time or take longer on qualifying based on inconsistent income, this is what this particular type of, loan could be for. So it's for borrowers who may have a hard time or take longer qualifying based on and consistent income. So how does it work? The program qualifies the borrower by having the employer fill out a written verification of employment, a full written VOE. And the benefits of this particular program is the written verification of employment program offers an alternative approach to income verification, providing a streamlined and reliable method for confirming a borrower's employment status. We save time and effort for the client, and they do not need to supply additional income documentation. So just to kind of get something clear too, we always do a verification of employment on any client, depending upon no matter what we're using to qualify for them, because we have to make sure that they're still working. So, but that particular verification of employment that we figure out, we have the employers fill out, is different than what this one is. That one is just, most of them are verbal VOEs stating that, hey, this is what they do. Yes, they're still working there, those kinds of things. This is a more in-depth full VOE, which breaks down everything for them, and they can use that to qualify. So another great product. 80% max loan to value, 680 credit score, terms 40, 30, 15-year. Same with the loan amounts, 100K to 2 million. The max debt ratio is 50%. But another very cool outside of the box product. Okay. And then here's the CCM Signature Expanded ITIN program. So like I mentioned, the ITIN is the individual tax identification number. That's what that is. So what is it? Programs that allow borrowers who live and work in the U.S. and have an individual tax identification number to qualify for home financing. Okay, so this is pretty cool. Provides easy qualification process for borrowers who do not have a social security number. So say, for instance, if they're, not U.S. citizens or born in U.S. citizens, they don't have a, social security number. This may be avenue for them to possibly qualify for a mortgage. And the different products for them, it would be full doc, is the LTV is 90%. If it's a bank statement type of loan, it's 85% max loan to value. And then the DSCR loans, it's 75%. So just an option for clients to be able to buy a house. So we literally have pretty much an option for everybody if they can qualify for it. Okay. Now, Signature Expanded and with unique property types, this is a pretty good thing to kind of go over too. So for manufactured homes, financing for double wide or greater manufactured home utilized as a primary residence, eligible for the following Signature Series products are. So the full doc option, bank statement, asset qualification, 1099, profit loss, and work VOE all are eligible financing outlets for manufactured homes. So the only caveat is it has to be a primary residence. It can't be an investment property, and it's for purchases only. And then must be permanently affixed to the land, and they must own their own land. So this couldn't be obviously a property that would be located in a mobile park and that could be moved. This has to be on permanent foundation, and they must own the land as well and not lease held. Mixed use. So financing for buildings that have businesses in the addition to their normal residential use. So eligible on the following Signature Series: full doc, bank statement, investor cash flow, 1099, profit loss, work VOE. Borrower is not required to occupy the property or be the business owner or the operator of the business, all those types of things. So mixed use properties, for homes. This is not a real big typical one, but it's for financing buildings that have businesses in their addition to their normal residential use. So say for instance, they've run their business out of their home, type of a deal. This could be an outlet for them. Okay, commonly requested exceptions. So this is what's kind of nice too. So here's a good breakdown of what the common requested, exceptions are, that especially for these products that don't fit within the normal conventional or conforming bucket. So there's no landlord history, 5% to 10% LTV exceptions, it's possible. FICO, which is credit score exceptions, minimum to maximum loan amount exceptions. So in the case, for instance, they say it's $100,000 is the minimum loan amount. Depending upon the situation, who knows, we may be able to get an exception for, the loan size too. DSCR, below minimum requirement, excessive NSFs, declining deposits, housing payment history that's not documented, multiple condo features, housing payment history, which is basically late payments, anything no more than one over the last 30 months, use of business assets with less than 51% ownership, those kinds of things, insufficient trade lines, multi-unit ADU, borrow minimum contribution, reverse shortages, deed restrictions, those kinds of things. These are commonly requested exceptions that we're getting for these products since it's outside the box. And then our CCM Infinity lending program. Our Infinity program offers home lending assistance as a non-traditional benefit. It's an easy way for an association to demonstrate to your members, both current and prospective, that you'll be willing to provide them with benefits that improve one's quality of life, enhance their new memberships. And do you know a company that has 250 or more employees that we could do a discount for? So this is basically, if you had clients or, good clients that maybe were business owners and things like that had a bunch of employees, they may be able to, be a part of our CCM Infinity lending program, which can often open up some more doors for them and, for them some more benefits, if they use us for their financing. And so preferred mortgage savings plan. So this is another branch of the CCM Infinity program, business to business. So savings can be applied to purchase any refinance loans for primary vacation home investment properties. Members have access to dedicated mortgage team and substantial savings up to $2,100. Landing page for employer, CCM Infinity. So basically a nice outlet that they could, share with their employees. And so we can possibly even go into them and teach them and educate them on different types of mortgage products and things like that are available. This is another thing that's part of the Signature Expanded product that CCM is really trying to not just, do the standard touches of dealing with current buyers and current sellers, but helping businesses, helping their employees understand what options that there could, depending upon how they're paid, this could be a great fit for them depending upon their situation. So great stuff. All right, so that's all I really wanted to kind of go over on this kind of stuff. But one thing I did want to touch on before we got done with the non-QM presentation is if you ever want any kind of information on these things and you want to be able to, market this to some of your clients, market this to your seller, or market this to your buyers, and you wanted some of this information that's real attractive and it's colorful and it's real informative, let me know, because all I have to do is just send you an invite through my Total Expert system, okay? And what that does is that once you go in there and create your profile, put whatever picture you want on there, your Keller Williams Legacy Group logo, whatever you want to do, all of that stuff, we can even co-market some materials, together that you can put out in your first-time home buyer packets, or, out at your listing appointments and things like that. Great information just so you have an idea of what we can do, not just with our non-QM stuff, but with any product that we have. So, okay, I see you, Carmichael. Yep, no problem. What I'll do is I'll make sure and send you, when you're done, put the email address that you use in the chat, and I'll be able to send you one. If you use the Keller Williams one, I'm sure I could probably get that one. But if there's something you use other than the Keller Williams Legacy Group email that you have, let me know what that is, and I'll send you an invite to my link for my Total Expert. Okay, great. All right, I see both of those in there. That's wonderful. Okay. So great stuff. I mean, Total Expert system, it's just wonderful to work with. Okay. All right, I know that was a lot of information in kind of a short time, but I wanted to make sure and kind of go over all of that information with you, just so you guys have that, and to let you know that there is lots of different options outside of just a traditional financing routes. So, I mean, this is exactly why we're here, is to educate you guys on this stuff. And you don't need to be, crazy professionals, but just having a basic knowledge of it and then sending them to me, and then I'll be able to take and to talk to them about it and go over their situation to see which product might be, the best for them. So lots of good information. Let's stop the share real quick. Okay. All right. So, but any questions? Is there any scenarios that you guys are seeing out there? People that have asked you, hey, what do we do in situations like this, Cliff, if we've got a client that, owns a farm or owns, multiple businesses and doesn't show that he makes any money, all those kinds of things, please feel free to let me know. Because sometimes it just may take a conversation and going over some information that helps them that they may not know about. So yeah, by all means, any questions? Yeah, you guys can unmute now if you want to. We can chat and go over some things. If you have anything, let me know. Okay. All right. If not, that's all I've got for today. I'm gonna put together another class here next month. Probably some other products that we have, going over some different things. I'm gonna try to see what some good topics that you guys may want to learn about and get some understanding on. So I'll keep you posted for November, and then I think in December we're gonna probably do something fun. Maybe do something fun, maybe holiday oriented. Because I know it's December and a lot of people do their own thing. Maybe we'll do something fun and do like some mortgage trivia and have some food, something fun like that. So, but I'll keep you guys posted on that. Okay. But thank you guys for attending today, and everyone here in the classroom as well. So I appreciate it. And like I said, if you guys ever have any questions or need anything at all, reach out to me. I'm happy to help you with anything you need. All right. Enjoy your day, guys.
Thank you.
Thanks.
Have a good day.